So here's another weird side effect to the government shutdown. Private companies are having a hard time going public. That means companies like Uber, Airbnb, Lyft, that all had plans to do their IPOs this year, now have to put those plans on hold. That's because they need SEC oversight to actually go through that process, and the SEC, as you've probably guessed, is largely closed with the government shutdown. So what's it like for these companies in IPO limbo?
Hey Leslie, how are you?
Good, how are you?
Good, I'm great.
What's it like to feel like you can't really move forward in the process? Has it become a problem with the companies that you speak with?
At the current time, what it's done is slowed people down. So if you look last year, there were approximately $10 billion of IPO raised in January. So it certainly, for the first couple of months of the year, is going to slow down plans. I think most people at this point believe this will be relatively short term and things will return towards normal here shortly, but that remains to be seen.
So you're saying it's gone from $10 billion to zero year over year?
Year to date, that's about right, yes.
The longer the shutdown lasts, the bigger the headache it becomes, especially for companies looking to raise that cash to actually fund their business, as well as the investors who want to add those flashy names to their portfolios. Jeremy.
Yes.
The SEC is not in full operation. What does that mean from an investor's perspective?
For us, when we go into the late-stage private ecosystem, the intent is to invest privately, participate in the IPO, and then invest when they're a publicly traded company thereafter. And so the duration from time of investment when they're private until when the IPO is a pretty important factor or input in our analysis. I think if it goes for another month or two, it'll probably have limited impact. And after that, I think it starts to become somewhat of an issue. What you can do about it, I don't know.
What does it mean in terms of kind of market conditions as well?
The inventory was coming, and it was long-awaited inventory coming in 2019, and the investor appetite was there. And as you know, it goes in cycles. And so it seemed like at the beginning of 2019, we were really kind of looking at the perfect storm. Can that change? Absolutely, especially the larger guys. There's some pretty lofty and I would say definitive valuation expectations, and so all of that, can kind of come into question in a weaker market.
And the thing is, it's not as simple as just reopening the government. If there's a sell-off in the market or volatility creeps in, that could be problematic for a lot of these IPOs who were hoping for decent market conditions to make their debut. Basically, if the stock market sells off, they'll need to accept lower valuations to price their shares, which could mean less cash coming in the door to fund their operations. That's why these companies hope to go public sooner rather than later, because the longer they sit on their hands, the greater the risk that their window for going public closes.
Hey, NBC News viewers, thanks for checking out our YouTube channel. Subscribe by clicking on that button down here, and click on any of the videos over here to watch the latest interviews, show highlights, and digital exclusives. Thanks for watching.